day friends. In the lecture series on personal financial planning, we were talking about, in my previous lectures on the personal financial planning, the investing in gold. And while talking of investing in gold, I talked about why the gold investment is important, what are the different forms of investing in gold, what are the benefits of investing in golds, and there are two forms of investment of gold we talked about in our previous lecture. That is basically investing in gold in physical form plus investing in gold in ETF form. Now, in this lecture, I will be talking of other forms of gold investment, and one of them can be gold mutual funds. As friends, by now you must be knowing, if you are tracking the subject of the personal financial planning and if you are tracking my lectures on personal financial planning, I have talked many times in this lecture series about the mutual funds. So, the way equity mutual funds, debt mutual funds are being created, similarly, these days gold mutual funds have also become very important, not only important but popular also. People who do want to invest in gold, and why you want to invest in gold, we have discussed in the previous lecture that it is a good hedge against inflation, it is a good hedge against the volatility in the equity market, and over a period of time it has been observed, if you take the long-term data of the gold prices, it has given you reasonably good return. There are years in which gold prices has even fallen from the previous year, but if you take 5-year data or 10-year data, you will find that it has always given you good returns more than 10%, if I say a broad figure. I mean, I'll be changing, because I'm not saying it is a particular figure, but broadly I'm saying it has given you more than double-digit return over a period of time, not 2 years, 3 years. There have been years where the gold prices have fallen from even the previous years, but in a long run, it has given you more than 10% return, even higher than that. So, one important form of investing in gold is gold mutual funds. So, it is similar to in the equity mutual funds and the debt mutual funds. So, gold mutual funds are invest in the units provided by gold ETFs, as the underlying asset is held in the form of physical gold. Because while you talk of the mutual fund, what the mutual fund do? Some asset management company purchases that asset on your behalf, the small unit holders, because I as an individual may not be very having professional expertise, what is the right time to buy, when is the right time to sell, and the complexities of investing. So, what I do is that I hand over my money to a asset management company which runs mutual funds, and on my behalf, the mutual fund manager or the asset management companies buys and sell that asset class, and that asset class can be gold. For that, they charge small professional fees, right? So, the mutual fund industry in India is well regulated by Securities Board of India, SEBI, right, which is a very respectful controlling agency, which is a regulatory body in India, which has high credibility. So, people do trust that this SEBI is taking care of our interest. This regulatory body is taking care of our interest, and this assets management company have to follow the rules and regulations of the Securities and Board of India, which are very strict, and you have to make a lot of compliance with the rules and regulations. If you are running a asset management company, if you are running some mutual fund, right, schemes, so then you have to comply with those rules and regulations which are framed by the Securities and Exchange Board of India. It means the credibility of investing in a mutual fund is there. So, what you can do is, you can, instead of buying gold in physical form, you can buy gold through mutual funds. So, this function just like any other mutual funds. Like any other mutual fund means equity mutual fund, debt mutual fund. Similarly, there is a gold mutual fund. So, these mutual funds are managed by various asset management companies that follow a fund of fund structure and primarily invest in gold ETFs. So, primarily what they do is, because there is always an underlying asset, for which asset you are creating a mutual fund? You are creating a mutual fund for gold, right? So, the mandate is to invest in the gold, right? Or the mandate may be investment in the different forms of precious assets like gold, silver, platinum. These can be combination of it, but here in this lecture I am sticking myself to the gold investment. So what these mutual funds say, they buy the gold ETFs, right, and they create a fund of fund structures. Means ETF itself is a fund, right. So what you are doing is, you are, as a mutual fund, as a asset management company, you are buying gold ETFs. So you work as a fund of fund structure. Now after talking of gold ETFs, now I will be talking of sovereign gold bond. If you ask me personally, which is the right way and which is the best way of investing in gold these days, I am talking of investment. Friends, don't get confused with the purchase of jewelry. Jewelry is basically, I would say, you are purchasing it for consumption, and there are two types of consumption. Consumption means when you consume and it's over. That purchase of jewelry, not only you use it, but over a period of time, as the price of gold increases, the value of your jewelry also increases, right. The only thing depreciates is if there is an impurity, the making charges, the other things which you have paid, right. So that is the only question mark. Otherwise, the value of the jewelry also increases. But if you are purchasing gold purely for investment purposes, I will say that sovereign gold bond, I am talking in Indian context especially, is the very right way of investing in gold. And I always proponent of investing in the sovereign gold bond if one wants to invest in gold. So what is the sovereign gold bond? These sovereign gold bonds are issued by the RBI on behalf of the Government of India, right. So this sovereign gold bond is a type of government security valued in per gram of gold. It serves as an alternate to real gold. So Government of India RBI realized that people in India are the gold lovers. They love to purchase gold, right. They keep it as an wealth. So instead of keeping the gold as in form of wealth as in physical form, what the option available with you is that you can buy the sovereign gold bonds, and the underlying asset is gold itself. So as the price of gold will increase in the market, so will be the value of your gold bond, right. If the value depreciate, so will be your value of the sovereign gold bond. So there is a direct 100% correlation between the price of sovereign gold bond and the price of physical gold, right. So it serves as an alternate to real gold. These bonds can be purchased by investor at the beginning of the plan. Means time to time, the Government of India, when I use the word Government of India, it means RBI, comes out with a sovereign gold bond schemes. Say scheme 1, 2, 3, 4, 5, 6, 7, like that, right. So time to time, depending on after 6 months, after 4 months, after a year, they come out with a sovereign gold bond schemes. And at that point of time, per gram of gold, they decide. Then, and how they decide? Basically, when they announce the schemes, so they say average price of the previous 3 years, means there are certain ways in which they calculate the price, and on that price, they issue the gold bonds. So, at the time of coming out with a scheme of this sovereign gold bond, a particular price is determined. So people who want to subscribe it, they can buy this sovereign gold bond at that price, and this price is basically the price of in terms of per gram of gold. So you can buy it from the beginning as the plan comes, as the scheme is being announced by the RBI, or these sovereign gold bond series, we say sovereign bond series 1, 2, 3, 4, 5, like that, right. So these series can be purchased from the market, because these sovereign gold bonds are listed in the stock exchanges. So you can buy even these gold, not only at the initial issuance of the sovereign gold bonds, even you can buy it from the market also, right. And at the time of maturity, they are redeemed. In India, these sovereign gold bonds are issued for a period of 8 years, right. So when you buy these sovereign gold bonds, the maturity period of these sovereign gold bonds are 8 years. So bond is issued by the Reserve Bank on behalf of the Government of India. Minimum investment in the bond shall be 1 gram with a maximum limit of subscription of 4 kg for individuals and HUF. If you are an individual or if you are an HUF, maximum quantity you can buy of a sovereign gold bond is of 4 kg, right? And the minimum investment is 1 gram. So from 1 gram up to 4 grams, you can buy as an individual or as an HUF. If you are a trust, if you are a notified entity, right, the maximum quantity that you can buy is 20 kg, not 4 kg. 4 kg is applicable in case of individuals and HUF. Other than this, if you are a notified entity or the trust, you can buy up to 20 kg. So there may be a risk of what is the risk involved in the investing in sovereign gold bond. So there may be a risk of capital loss. As I was saying, the value of the sovereign gold bond directly relates with the price of the gold in the market. If the price of the gold increases in the market, so will be the value of sovereign gold bond. If the price of gold will decrease, the value of your sovereign gold bond will also decrease, right? So there may be a risk of capital loss if the market price of gold declines. However, the investor does not lose in terms of the units of gold which he has to pay for, right? So since I am buying 1 gram, supposing at the time of issuance that the gold prices, say last issuance which the government of India made was, say, at the rate of 56,000 rupees, right? So for per 10 gram, I'm just saying a broad figure. So 5,600 rupees. So if I purchase 1 unit, that is of 1 gram, so 56,000 rupees, 10 units, 5,600 rupees per gram. So my holding will remain 1 gram, but the price of that holding will fall if the price of gold fall and appreciate as the price of gold will increase. Means in terms of units, my holding will remain same. So what are the benefits? This is very important. Why I said I am a proponent of investing in gold, sovereign gold bond. Why it is so? What are the benefits that comes when you invest in gold through sovereign gold bond schemes? There are no risk and no cost of storage. When you buy gold and keeps in your almirahs, there is always a risk of theft. There is a storage cost involved if you keep in your lockers, right? So there is a buying cost, there is a selling cost in physical form. But here, if you are buying sovereign gold bonds, there is no risk as far as the loss of theft is concerned, as far as the loss is concerned, that there cannot be lost, and there is no storage cost involved as such, because it is just purchase of gold in digital form. So investors are assured of the market value of gold at the time of maturity and the periodical interest. Government of India offers 2.5% annual interest when you buy these sovereign gold bonds. That supposing I have invested 1 lakh rupees in the sovereign gold bond. So on this 1 lakh rupees every year, biannually, I'll be getting 2.5%. Means on 1 lakh, 2.5% for 6 months period, and in the next period, after say particular period, means after 1 year, completion of the 1 year, I'll be getting another 2.5% for this 6 months period, right? So biannually, I get the interest at the rate of 2.5%, right? So periodic interest is there, and this interest rate is 2.5% on these gold bonds. Sovereign gold bond is free from issues like making charges and purity in case of gold in jewelry form. So since it is only a digital form of investing, it is issued by the Government of India, and when I say the word Government of India, it means RBI on behalf of the Government of India. So since there is no making charges, there is no question of purity, so it is considered to be a very good form of investment in gold. Bonds are traded on the stock exchanges. So as far as the liquidity is concerned, I said these bonds are being issued for a period of 8 years in India. It doesn't mean you can't sell it. You can sell it. You can sell it in the stock exchanges. So that's why it gives you a liquidity also. So these bonds are tradable on the stock exchanges. Sovereign gold bond holders can avail loan on sovereign gold bonds. The maximum amount that can be availed is 20 lakh rupees per individual. Since this is considered to be good asset, safe asset, if you are holding any sovereign gold bond, against those sovereign gold bonds, you can take loans from banks, etc. Because you just ask your banker or even the Government of India also offers loan against this. When I say Government of India, again I am saying referring to RBI, against these sovereign gold bonds. And one very important feature of sovereign gold bond is that they are tax free. When I use the word tax free, it means from the purchase up to the last maturity period, which is 8 years. So if you hold these gold bonds for a period of 8 years, then in that case there will be no tax that will be charged on the income that you generate out of the selling of that gold bonds. Means the capital gain that you will be making, it will be tax free, providedly you hold it up to the period of 8 years, right, which is the full period of the sovereign gold bonds. So sovereign gold bonds are tax free, which is not the same as when you purchase physical gold. When you buy the physical gold and sell it in the market, whatever the profit you generate, from that you pay the capital gain as per the tax law of the country. At present, if you are selling it before 3 years, certainly it will be taxed at the rate at which your tax slab is. Means it will be a short-term capital gain, and this short-term capital gain will be taxed depending on your tax slab. If you are in a 30% tax slab, you will be paying 30% tax. If you are holding it for more than 3 years, so long-term capital gain will be applicable and your tax will be accordingly. So one must pay GST. I mean, the tax will be paid as per the applicable law. But as far as the sovereign gold bonds are concerned, if you hold it for a period of time, there is no capital gain, right? So unlike in the physical form of gold, which is a big benefit of investing in gold, right? And apart from this tax concession, I mean, there is no GST as such. If you buy the physical gold, as I said, when I was talking of purchase of gold in physical form in my previous lecture, right? So you have to pay the GST. At present, I suppose it is 2%, right? But 2%, since the amount of investment is quite heavy, investing in gold, right? So 2% is also a good amount of money. So GST when purchasing actual gold. However, the capital gain tax arises on redemption of short-term capital gain on an individual has been exempted. Means after 8 years, there is no tax. But when I am saying no tax, so if you are selling it, normally the sovereign gold bond period is 8 years. But if you want to sell it, supposing you need money and you can't hold it, this sovereign gold for 8 years, it doesn't mean it is illiquid. As I said, it is liquid asset. You can sell it in the market, right? They are listed on the stock exchange. So if you sell it before 3 years, then as per that applicable tax law, means tax slab, you will have to pay tax, right? But if it is more than 3 years, right, then your tax will be at the rate of 20% with indexation benefits. I hope you understand the word indexation benefit. Means the price inflation, your purchase price will be adjusted as per the price inflation, right? So indexation benefit is there if you are selling it after 3 years. So this is a great relief. But again, I repeat that after 8 years, no tax, which is big advantage of investing in the sovereign gold bond. Now, after talking of gold ETFs, gold mutual funds, sovereign gold bond, there is another form of investing in gold which is known as digital gold. Although these days Securities and Exchange Board of India, I mean, the prohibits its members to facilitate the purchase and sale of the digital gold. Why it is so? Because on exchanges you deal with securities, and digital gold is not being defined as securities in Indian context. Gold ETFs is being defined as security, but digital gold is not being defined as security. So as far as the exchanges are concerned, as far as the Bombay Stock Exchange, BSE or the NSE is concerned, they impose a restriction on its member to deal in the digital gold. But however, there are certain agencies like MMTC, PAMP, Egmont, Safe Gold, and there are many other plethora of the agencies which facilitate the purchase and sale of digital gold. So investor can also buy it from the platforms such as mobile, e-wallets, broking firms, as I said, but broking firms, they are being restricted now, and financial institutions. It is certified pure, means the benefit of investing in digital gold is that it is pure purities. There is no question of impurity like jewelry or like in question of physical gold. It is certified pure, stored safely and fully insured, and the market price of the physical gold governs the return on the capital gold. See, when you talk of the gold ETFs, you talk of the gold mutual funds, whether you talk of the physical gold, you talk of the sovereign gold bond, or for that matter, digital gold, right? So the value of these all forms of investment in gold depends on the value of the gold. If the international market, in the national market, if the gold prices increases, so will be the value of a gold ETFs, a gold mutual fund or digital gold, right? So if value depreciate, the value of these digital gold will also fall. So depending on the value of the gold in the market, right? I am referring to the physical gold, right? What the gold prices fetches in the market, your digital gold value also increases or decreases. Investor can buy digital gold on any denomination, means one of the big benefit of investing in digital gold is you can buy of any denomination. Even, you can invest 1,000 rupees if you want. Like I said, when I said you invest through sovereign gold bonds. So the minimum investment ticket size is 1 gram, maximum is 4 kg. Right? So no individual can buy more than 4 kg in the sovereign gold bond. You can buy up to 10 kg, 20 kg, or you can buy even 1,000 rupees. You can invest even 1,000 rupees, which will be just fraction of 1 gram, right? So 1/6 of, if supposing the gold price is 60,000 rupees per 10 gram or 6,000 rupees per 10 gram, I want to invest. I'm a small investor. I want to make a SIP in the gold. So I can't make SIP of 1,000 rupees per month in sovereign gold bonds, right? It will be difficult for me to invest in other forms. So the best way is buy a digital gold, right? So any fraction, any denomination of money can be invested in the digital form, and you can sell it at any point of time because they are listed. So listed in the sense they are traded. So since they are traded, they can be disposed of at any point of time. But the problem with the digital gold is that digital gold lacks regulatory oversight because it does not have the regulatory body such as SEBI or RBI as of yet. Means unlike in the gold ETFs, which are being regulated by the RBI, which is being regulated by the Securities and Exchange Board of India, right? Even the sovereign gold bond, because it is already being issued by the RBI, that is the government of India, so there is no regulation required, but still regulated by the SEBI. But as far as the digital gold is concerned, since it is not being considered as a security, not being considered security means it is not being regulated by SEBI. So SEBI and RBI has no control over it. That's why we say, digital gold has not become very popular in India. Although in the world over, people do buy and sell in form of digital gold. But in India, because of these restrictions, the buying and selling of digital gold is not very popular. Please don't get confused with the ETFs or mutual funds. That is also basically a digital form of investing. But I'm talking of pure digital gold investment. So the benefits of buying digital golds are secured assets and convenient assets purchased. Secured means there is no risk of theft, there is no storage cost involved, right? There is no insurance cost involved. And it is a convenient asset. You just pay the money, it is in digital form. No hassles of having physical lockers. Digital gold transactions can take place in a smaller amount. Any denomination you can invest. If I want to invest a SIP of 1,000 rupees, I can do investment of 1,000 rupees or 500 rupees per month in digital gold. Right? Multiple and quick redemption options. You can redeem as many number of times as you want, right? And you can redeem at any point of time. Quick collateral for online loans. Because digital gold is in the digital form you are having it, so is a proof that you are having that much quantity of gold, right? So you can apply for online loan if you want to buy gold. Now, after talking of very quickly the risk involved, physical gold, which I have talked while talking of these things, theft, purity issues, loss during manufacturing, gold ETF, market risk related to volatility of gold price, means if the gold price increases or decreases, the value of your gold ETF will also, same will be of the, same risk is involved of the gold mutual funds. sovereign gold bond, risk of sovereign default. If at all the government of India fails, which has never happened in the past, never happened in the history of this country, right? So I will say there is almost risk-free. Digital gold, regulatory oversight. So these are the risks involved in investing in gold, right? Different forms of gold. And finally, taxation. Taxation also I referred while I was talking of different forms of gold. So tax on selling physical gold, individuals selling physical golds would be subject to 20% tax rate as well as 4% cess on long-term capital gain. Means if you are selling it for after 3 years, you are subject to long-term capital gain, and which is at present in India is 20%. Apart from this, 4% cess. If the investor sells gold within 3 years of purchase, then it will be considered as short-term gain. This gain is added to the income of the person and taxed accordingly to the tax slab. So if I am not holding this gold for more than 3 years or 3 years or more, then and I am selling it before that 3 years, then it is subject to the short-term capital gain and I will be taxed as per my tax slab. If I am in 20% tax slab, I will be taxed at 20%. If in 10%, I will be taxed at the rate of 10%. Right? Tax on digital gold. In the digital gold, you have indexation benefits. So when it comes to capital gain taxes, digital gold is handled the same way as physical gold. Returns on digital gold assets held more than 3 years, but there is a indexation benefit which is important. Indexation benefit means it is being adjusted, the purchase price is being adjusted as the inflation takes place. So the amount of tax reduces. It depends on whether you want to take indexation benefit or not. It depends on the individual. It depends on the income bracket. So this is, friends, about the investing in gold. We have talked about different forms of investing in gold: physical gold, gold ETFs, gold, digital gold, and gold mutual funds. So these are various forms, and we have also talked about the tax implications of investing in golds, right? And what are the risks involved in investing in gold. Thank you very much.